So when I'm talking to people about life insurance, they usually have a lot of what if kind of questions. What if this? What if that? I'm going to dive into one of the biggest what ifs that I usually hear right now. My name is Jake Williams, and I'm a life insurance specialist with Step Up Wealth Management. For more information on life insurance or the role that it can play in an overall financial plan that is tailored to you and your goals, be sure to subscribe to my channel and hit the notification bell. That way, you're notified immediately anytime I upload a video and you never miss one. So, probably the biggest what if that I hear anytime I'm talking to anybody about life insurance is okay, if I name my spouse the beneficiary, but something happens to both of us, what happens then? And there are a couple things that are laid out that account for that. So the first thing that is there is you've got levels of beneficiary. And what I mean by that is when you sign up for a life insurance policy, they're going to ask who the primary beneficiary is. Now, the primary beneficiary is the first person that you look for, the first person that gets paid out if something were to happen to the insured. Most often I see that as a spouse, but that is not a guarantee. It could be any level of different people, just most common is the spouse. And the standard life insurance policy that I see is a married individual trying to cover their spouse and their children. That's kind of the base, generic policy that you think of with life insurance. So that's where I stay with for this illustration. So there's a life insurance policy on the husband. If something happens to him, payout goes to the wife. Now you start getting the what ifs, and I'm sure you can think of a couple of them already. Well, what if something happened and the wife passed away first? Where does that life insurance payout then go? That is where a contingent beneficiary comes into play. So if you have a single primary beneficiary and that primary beneficiary, what is known as predeceases or passes away before the insured, then the life insurance payout will then move down to the contingent beneficiary or beneficiaries. Now, for each of these, for the primary and contingent, it doesn't have to be just one individual. You can list out multiple people to be the primary beneficiary or list out multiple people to be the contingent beneficiaries. So if there's a husband and wife and let's say two children, standard setup that you typically see is the spouse would be the primary beneficiary and then the two children would be listed as the contingent beneficiaries. Now, if there are two or more beneficiaries in that class, so primary or contingent, then you need to list out the percentages. So in the example that I just gave, spouse, two children. Spouse would typically be the primary beneficiary listed 100%. There's only one primary beneficiary, so you don't really need to worry about that, but some may ask you to spell it out that detailed. Where the question then comes into play is the contingent beneficiaries, to where there are, if you've got two children, is it 50-50? Is it 70-30? Is it 60-40? There could be reasons for different cases, but you need to spell it out. So if you've got multiple primary beneficiaries, why might you have that? Well, let's think about it. If it's a single parent, maybe there was that predeceased spouse or single parent due to divorce or any number of different reasons. And you've got, let's say, three children. So if you've got the single parent, the three children could be listed as primary beneficiaries. Now, you then have to spell out the percentages there. Is it 33, 33, 34? Yeah, they have to add up to 100, so you're going to have to do some fidgeting with the math there because a lot of places will only let you do whole percentages. They're not going to let you do 33.3 for that third, math guys out there. So it would have to be listed out in the percentages. And then you could list contingent beneficiaries after those three primaries. So let's say each of those three children has two kids. So there are a total of 6 grandkids. You could list each of those 6 grandkids as a contingent beneficiary and spell out the percentages along there. Now, be on the lookout for another video that I'm going to drop in a couple of days where we detail another even crazier segment of the what ifs of if you've got multiple primary beneficiaries and then multiple contingents and a primary beneficiary passes away first and how all that gets split. I'll be detailing that out later. It can get complicated, but it doesn't have to be that crazy. The last thing I want to talk about today, and it's again a what if that I heard just last week when I was talking to somebody, is if you we'll go back to that simple example of husband, wife, 2 children. Husband has a policy. What happens if there is a catastrophic accident and both the husband and wife pass away at the same time? Because let's think about it. If the wife was listed as primary beneficiary, the husband passes away first, the policy goes to the wife. So all of that payout would be hers. Then does it go into probate? Does it go to her beneficiaries? That can get crazy. But if the wife had passed away first and then the husband's policy is paid out, it would just go directly to the 2 kids as contingent beneficiaries. So to avoid that headache, there's actually, it's out there, it's printed. It's what's known as the Uniform Simultaneous Death Act. And what it says is if there's a catastrophic accident where it's difficult or impossible to determine which of the individuals passed away first, then for the insurance purposes, it is decided that the primary beneficiary would have passed away first. And what that means is the insured, instead of the payout going to the primary beneficiary and then on into their estate, that payout would then just simply go to the contingent beneficiaries. It's there to spell out and again, eliminate ambiguity, which I talked about in some of the other videos I did on the clauses in an insurance policy. But it's really just to make sure there's no questions, there's no doubt, there's no wiggle room, and it's all clearly stated. Because the last thing you want is there to be arguments, there to be fights, and that can lead into lawsuits and family being torn apart, or if it's business partners splits, it can get nasty. Anytime money's involved, it can have the potential to get nasty, so it is spelled out clearly and succinctly. This is what happens in this scenario. If you've got other what if kind of questions on what happens in a life insurance policy, go ahead and drop me a comment down below. I'd love to know what kind of questions, what kind of what ifs you guys have, and maybe that's something that I can turn into a video in the future to help you guys out. If you liked the video, if you thought it was good information, give me a thumbs up. It lets me know that I'm doing a good job. It lets YouTube know that I'm doing a good job and just helps everybody out. And lastly, but most importantly, if what we talked about today and setting up a life insurance policy or making sure that your beneficiaries are set up properly to do what you want to do with your life insurance policy, there's a link in the description below where you can apply to become my client. Please go check it out. There's some fact finding where I give you some information right away. Don't have to sit down for a meeting or anything. I just give you some information, some advice right there. But then if you want to go farther, you can schedule a time to meet with me where we will sit down and we will figure out what you need and how we can get there. In the meantime, though, please take care of your now, your future, and beyond. Thanks for watching.